Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 25th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media, where I've talked about everything from economic to geopolitical and then how that affects the market and analysis on that. Well, in these daily market commentaries, I do that, but I layer on some option strategies that I have come up with that I feel are good and appropriate for that assumption I come up with on the markets through that geopolitical and economic analysis. All right, so without further ado, before we start talking about the trades that I've done or I'm looking at and how the markets are reacting, let's look at the economic data across the pond. We got some core CPI numbers that came in at 1.7%, expected to be 1.5%. Remember, consumer price index is CPI. And then the CPI number coming in, the regular CPI number, which puts back in like food and things of that nature, because food and energy, tobacco can be a little bit more volatile or seasonal in a sense, that we look at the CPI adding that back in, and that comes in at 1.7% as well. So no real inflation aspects coming out of the food and energy. Obviously, with the energy going down, when you strip out that energy, we can see that the rest of the CPI starting to move a little bit higher. Energy driving down the headline number there. All right, here back in the United States, we got durable goods orders. Remember, durable good orders is anything that has a life expectancy that's manufactured over 3 years. So we're talking refrigerators, TVs, cars, airplanes, things like that that we might buy that are going to last longer than 3 years. That what I would expect to come in a little bit lower, right? If we look at durable goods, that comes in at 1.2%, expected to be a negative 1%. Did revise last month's number up from negative 0.2% to a positive 0.1%. So a little bit bizarre, especially with the woes that we're seeing with Boeing having a lot of orders being cut. Also, I'm hearing the car dealerships aren't doing so great right now. Now, this number is only coming in right around when we started seeing this pandemic start. So people could have been out there buying cars with low interest rates. I mean, we talk about low interest rates with the mortgages. Well, you're going to get lower interest rates also on a car as well. So people could be going out there and doing that. Now, if you strip out the more volatile items like the cars, airplanes, transportation, things of that nature, it came in at negative 0.6%, which was worse than the negative 0.4%. So people out there buying cars and things like that that are something that I would have thought would have waned a little bit more than that. So computers, computers also. All right, so anyway, that's about it for the crude oil inventories. We came in at a build of 1.6 million barrels, expected to be a build of almost 3 million barrels. So that's a bit surprising that we are seeing some of that inventory move a little bit. Especially with the ramp up in production in Saudi Arabia, Russia, United States staying on pace with their production as well, despite the fact that we're seeing these lower numbers here. But crude oil still in the 20s, doesn't seem to be making much of a push to the upside, especially with this coronavirus continuing to be headline news. And people are still being quarantined, which means they are not driving. It means the manufacturing sector, like the automobiles, are not being made here in the United States. I think actually Kia might be one of the last ones to still be making cars here in the United States. All right, so let's get on to the overall markets. Again, we talked about crude oil. It is just slightly off. It could be considered unchanged for all intents and purposes there, right there at around $24 a barrel. Gold futures making a bit of a pullback here. Hearing there is a run on gold bullion, which is the physical, people running out there and driving that. Yesterday's move here in the gold futures was, they have this arbitrage, right, where you take the gold bullion, the physical, and see what that's being traded at in London versus the gold here in the futures market. Well, the spread is usually about $1 or, three. It's pretty tight usually. Well, yesterday that exploded out, and at one point was better than $50 a troy ounce difference from the futures going higher versus what the bullion was being in London. And that's also a cause of that, where people see that futures price can buy the bullion and they're making that spread, right? You can take advantage of that whole trade, which drives that, volatility on the bullion. All right, bonds unchanged right now. Take a snapshot. One thing to note, we did see 1 month and 3 month bills go into negative territory today. So that is something that is pretty historical, seeing negative rates on the very short term, which means, they're paying you to borrow. Is crazy, but it is starting to leak into the United States on these negative rates, something to keep an eye on, despite the fact that we're seeing bonds just slightly off on the day. VIX, after yesterday's sell-off, remember yesterday we got that real sharp sell-off into the 30 handle, back up into the 60s today, or actually we settled up in the 60s, but still up in the 60s, I should say, and kind of bouncing around here. We're seeing a real mixed bag. Earlier on, the Dow was up and the NASDAQ E-minis were off on the day. I think there's an opportunity here because there's a bit of a sector rotation going on, and I talked about this in a webinar that we're getting ready to put out there, where we are seeing things like the Walmarts and the Amazons, which really got that hockey stick move to the upside during all of this, when we saw everybody rushing out and buying toilet paper, and some of the transportations, which I expect to come off a little bit, were getting beat up. So we saw those difference where, there's always an opportunity out there, whether you're a bull or a bear, to find markets that are trending. Well, now we're seeing that flip where the transportation is making a bit of a comeback, and we're seeing things like Walmart really take a nosedive, and people are dumping out of those stocks, possibly just looking to take some profits on those. But that is opportunity in my eyes, because I got into a couple of things that might be a little bit shaky in regards to the transportation, and I felt like I missed the opportunity in Walmart and Amazon and things of that nature. So today I am looking at opportunities in and around those types of sector rotations where, being a contrarian sometimes is the right way to do it. I held off on chasing some of those other big names like Kroger, Walmart, Amazon, and Target. So I missed that opportunity before on that upside swing, but there might be an opportunity right now for that. So after we go through the charts, we'll take a look at that. This is the Dow Jones Industrial Average up over 650 points on the day right now. Yesterday we've been talking about this for quite some time, getting that bottom here. We broke through like 3 times. We got a big bottom here, which was right there at around 18,780. Well, we broke through that ish area, went down, looked like we were going to test the 1800 handle, 86 points away from it, got the rebound. Now, we got a confirmation, and I've talked about this several times. It doesn't matter what you're looking at. Anytime at a bottom of a move, that is a very solid bottom in my eyes from what I've seen before. Now we're back above the 9-day moving average, which is showing short-term bullishness. Now, remember, we got below the 9-day moving average over here. Anytime you get below it, it's showing short-term bearishness below and short-term bullishness above. You get above the 200-day and the 50-day, and that's, a longer duration. Something to note, a lot of people are talking about is you got the crossover from the 50 to the 200, and that usually indicates a long-term bearish cycle going on. But something we're looking at as traders is this getting back above the 9-day moving average, which is what we have done. It tested it earlier this morning, and now we're up and away near the highs of the day. So the market really starting to make a move. Now, something to know with the NASDAQ really being the dragger, but this is part of that sector rotation. You know, people were getting into that tech stocks that I was talking about that will, you know, make it through this. You know, we're talking about like the EAs and stuff like that, EA Sports, Activision, Adobe. People started piling on in those, and we're selling some of those other big names like the transportations. That's part of this rotation as well, where we're seeing like EA Sports off on the day as well. So that's kind of holding off some of these NASDAQ, the NASDAQ here. We did test the 50-day, or sorry, we did test the point of control. We are above the 9-day moving average. We did get confirmation. Now, people might be asking whether or not this is a top, and it doesn't usually shake out that way as far as I'm concerned. Usually, you know, we've gotten that bottom. So in some of the other markets, you know, you get this bottom here where you get the red doji. However, it kind of ends up, and then you've gotten a confirmation here, and that was a big move. So like in the Dow Jones, yesterday's move was the biggest move we've seen to the upside ever, I think, in points terms, and you know, the biggest rebound that it's seen since basically the 30s or something like that, I think, in percentage terms. But anyway, what we're looking at here is confirmation of a bottom. That usually means we have found the bottom. All right. And of course my chart blew up on me. So let me try and redraw this real quick. So we had the chart move like that, right? And then we've gotten the confirmation. So that usually indicates that we have found a bottom. All right. All right. That usually means that is a bottom there. Now what we're seeing is a bit of a chart pattern that kind of looks like that, right? And that usually is something you'll see after you get those big bottoms. It's a pause in the market, which is good. It kind of works out some of this. The shorter, weaker hands, shorter duration, weaker hands will kind of shuffle out of these types of positions and will kind of consolidate, where some of the other people, like the technicians or the people that feel like they might have missed that bottom, start coming in buying it. So you get a bit of a bounce back and forth, and that's usually just a pause. But we will have to wait to see what happens tomorrow. Obviously, on confirmation, you know, we start moving to the upside. That could be very well that V-shaped recovery that I've been talking about. I do believe we're going to kind of bounce around here till this really shakes out the next couple of weeks. I don't think that you're going to see a massive move to the upside to even consider going up there and testing those all-time highs anytime soon. But to bounce in and around this area, around the point of control, is something that we could easily see happening. So basically, we're looking between 7,200. I'm looking between like 7,200 there and probably, you know, let's call it 8,200 or 8,100, really. All right, there's my bottom. So 8,100 going forward. There we go. Somehow that is something good to know, that that it's got the page thing there. I'm gonna have to remember that. 8,100. No, I'm not hitting you back. I don't even know how that happens. I don't know what causes that. Sorry, guys. Playing around with it as we go. So those are probably the areas I expect for in the NASDAQ. So this is the NASI trade that I think that will probably stay within, maybe test some levels there. You know, that 8,100 does also line up with the 200-day moving average there as well. So we're going to have to keep an eye on that too. Then we go over to the E-mini S&Ps, and they are back into positive territory. Earlier this morning, we were looking at negatives as the Dow and NASDAQ were in. Dow was positive, NASDAQ and E-mini S&Ps were in negative territory. Starting to see some moves here in the E-mini S&Ps to the upside. Let's take a look at the E-mini S&Ps on the daily chart. This is what I was talking about on the morning. We started seeing them go into negative territory. It looks like we're just trying to print the overnight range for the most part in the day session, but you can see very close to the highs of the day session right now, up 40, almost 45 points, pushing higher there. All right, so what have I done? I'm looking at a couple of things with Walmart. This was a trade that I did right off the bat, and let's just kind of throw this onto the daily chart here so you can get a good look at it on the morning. So you can see in the morning, we basically started out near the highs and sold off to 108.05 there. Well, during that time, I decided when we were trading up closer to probably 114-ish, I decided to go in there and saw this sector rotation. Walmart's been suffering, as you can see on the last couple of days there. We have breached or made new highs, 128 in Walmart, but the market has since sold off. Now, this was the big rally off of how well Walmart was doing, lines out the door and everything else. But now people are starting to cover those positions. I think it's a good opportunity for me to get into this name that I felt like I had missed out on, and this whole sector rotation thing that we've been talking about, people getting out of some of these stocks that did well to try and roll into some stocks that have been suffering. So we're seeing that happen. So I decided to go the opposite of that, and I went in and sold the April. And originally, early this morning off the bat, I sold the 105 puts, and that was basically 15 minutes after the open. And sold those 105 puts at 269. So when we looked at that chart, you can see obviously selling those 15 minutes after the open started. It didn't work out quite nicely. It actually slammed down against me. We're starting to see a bit of a move higher now, but so in that, I decided to go in there and sell the April, and I did that right before we went on here, probably about 15 minutes ago, and sold the April 100 puts also for $2.72. So added a little bit to that, a little bit lower. So I'm at the 105 puts and the 100 puts. So I would be happy to take this trade on in and around that support level, that psychological level of 100. And obviously my break even on those is $2.50 on average lower than where that is. So my break even on the 105 puts is basically 102.50, and then my break even on the 100 puts is basically 97.50-ish. All right, a little bit better than that, but let's just call that for rounding it off. So both of those added to my portfolio. Haven't done anything else. A couple of other things that have been working out real good is MasterCard making a nice big move today to the upside. Now, you do remember that I did sell some calls against my about a third of my position. I put some short calls on at the 145 handle, sold the 145 calls. So looks like those could get called away from me rather easily, but still have 2/3 of my position on. So hedged out of some of that risk there. EA Sports, this is also what I was talking about. They made a big move when people were talking about a lot of kids using the online gaming and stuff like that, but starting to see a bit of a sell-off here. I'm already in this name, a little bit lower than where we are now, but I'm long at 89, but that's part of that sector rotation. So if you felt like you missed on EA Sports, that's also another one that might do very well going forward. And then PENN just was having a massive move. If you guys remember this, they bought out Barstool Sports. This was the top I talked about. Did they do the Cuban collar on this trade? Market sold off, so in my IRA, I threw some of this in there as well. So they're making a big move to the upside again today with PENN. All right, so back into the value area on that one. All right, that's all I got for you guys. One other thing we got to do is go over the disclaimer. This is basically talking about we are an educational company. We are not here to give you guys investment advice. Nothing I talk about is a solicitation for you guys to buy or sell. I hate the herd mentality. I'm not about going out there and tell you guys what directional moves and what trades should be put on. What I'm here to do is give you guys option strategies and rules for every single option strategy in order to implement that. So we break it down. It's not just going willy-nilly and just snagging different option strategies out of thin air. What we're doing is we are showing you, well, this is the environment. These are the durations you have. Based on your market assumption, this is the right option strategy for that, okay? So check those out at protraderstrategies.com. Also follow us on Twitter at protraderstrategies.com as well, because you can get a lot of good content popping out from there. Got a little bit long in the tooth today, but hope you guys all enjoyed this. Please give us a thumbs up, thumbs down, like us on Facebook so that everybody else can get a part of this while you're quarantined at home. The best thing to do if you can't work is learn how to trade, right? If you can't take that, take it easy.